Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. Welcome back to another weekly watch list video where we're going to go over everything you need to know for the week ahead. Before we get started, please hit that thumbs up for the video. And if you are new, consider subscribing to the channel. So earnings season has basically dwindled down to nothing. You can see here up on the screen, that is who has earnings this week. Who cares? All right. Earnings season starts next week with the banks. All right. So this week, nice, easy week as far as earnings go. And then next week, we start to hit the real earnings season. And it always starts with the financial stocks. So something to keep in mind. Things should get pretty interesting. Okay, going over our sectors and how they've performed on the year, how they've performed on the month, and what I see starting to happen. And this is very interesting. So we all know that for the first quarter, right, the first 3 months of the year, technology has been killing it. Consumer cyclicals have been killing it. All right, all things that basically should not be happening outside of technology in a recession, right? Consumer cyclical, the consumer is still very flush with cash and they're willing to pay very high prices for things. I don't think that's going to continue, all right? And when demand starts to come down, companies, they have to lower their prices. And I think that is what we're going to start to see. Now, what I've noticed is on the 1 month, right? On the last month, we saw financial for various reasons have a tough time, but we also saw energy have a very tough time. And those defensive plays have a tough time. And we started to see last week energy picking back up. Okay. This is interesting. We saw technology do well, but not as well. Started to fall on down a little bit. All right. Starting to see a rotation back into those value and defensive type of names as the trade for technology and the chip stocks and the AI, all of those really high growth stocks has gotten a little ahead of itself, in my opinion. And I think that we're due soon for a bit of a pullback in tech. All right. So that's the sectors on the week right there. Looking at the economic calendar for this week, there's a lot of Fed speakers. All right. A lot of Fed talk almost every single day. And then on Friday, we have that jobs number. This right here has been one thing that has not moved yet. All right. The job market is very strong. The labor market is just very tight. All right. Employers are forced to pay high hourly wages, causing inflation to continue to be high, especially with services, right? And we pay for that. So that's why inflation is staying up. What the US unemployment rate, right now it's at just all-time lows, very, very low unemployment rate. For a recession to really hit, this number is going to have to go up a lot. Right now, the economy is still doing very good. Like I said, people are starting to, venture out like they have been the past year after COVID. People are spending lots of money, but that's going to eventually pull back. All right. And if that does, you will see the unemployment rate go up. And this is something the Fed looks at. So the jobs number is always an important one when we're investing, whether we're day trading, swing trading. It's just good to know and keep an eye on this. All right. So that's the economic calendar coming up for the week. And then we have the bond yields. I mean, just clear as day. All right. This is the past month. So in January, we had a very good month for the market. February, not a good month. And then March, a good month. And when did that really start to happen? When those 10-year yields went down, when all the bond yields went down. They all went down, A, because of the banking crisis situation, and B, because they think the Fed is going to have to lower rates. The bond market, like I've been saying over and over again, is just simply not pricing in what the Fed is saying. They think that they're making a mistake. So the bond market thinks that they're going to have to actually pivot and lower rates by the end of the year. With inflation up so high, I don't personally see that happening. I don't think that they're going to do that. But the bond market is telling you otherwise. And the NASDAQ loves that, right? Technology loves when the bond yields go down. And that's what we've seen. All right. So very nice move on the NASDAQ for the month. Basically, all markets had a very nice move. The bond yields have gone down a lot. Now, going over to our compass, the SPY. All right, so this is just a clear bearish to bullish reversal. It even looks clearer on the Qs, okay? That means that we bottomed out, started to make higher highs, retested those lows, really held up nicely, higher high, higher low, higher high. This past week was incredibly bullish. This is a bearish to bullish reversal. And that's on the Qs right here. But we can see here, the RSI is getting a little hot. All right. When it does get hot and overbought, the market pulls on back. And that's simply what's going to happen. The market will start to pull on back. All right. We have probably, if we look at this on the 3-year, and I'm going to go back to the SPY in just a second, but I want to look at this on the 3-year and the volume. All right. So this is the amount of volume done. And this was a nice point of control here where we saw support. And then we just broke out of this area. So there was a lot of volume here and we sliced through it. It took some time, right? There was some consolidation here, but then we moved up. All right. So what we see here on a move higher, you have that 340 ledge right here. That's a possible resistance. But like I said, I would watch this RSI. Every time it gets up to that overbought, it will pull back. All right. So just keep that in mind. How much higher we go, I don't know. We can literally turn around on a dime and pull back. But so far, the market looks nice. It did, rally up really nicely. It did set a nice, bull flag here and then broke out. So it did do what you would expect a market to do. This is healthy. This move up in January, pulled back in February, moved up in March. Where do we go now in April? All right, so that's anybody's guess, but this is a nice looking chart. I don't see many areas here. That's why I like to pull up the volume to see where we might go. I think that this is just going to be one of those markets where you want to look at the RSI because it's been really doing a good job at following this RSI. When overbought, it's pulling back. When it's oversold, it's going up. All right, so keep that in mind. Let's go back to the SPY. All right. So this is the SPY on the 3-year with the volume. Point of control, huge volume ledge. We just broke out of that. Right here, this gap that you see, we just closed that in 1 week. There's a big gap here in the last 3 years of lack of volume. Now we're coming up to another area here where there's some overhead supply. You can see right here, this 420-ish to 416. This area will be a little bit of resistance. You could see it happened back here. If we can break out, right? If we can continue this rally, because what we haven't seen on SPY yet is a higher high. We've seen it on the Qs, have not seen it on SPY yet. So if it does break through this volume ledge, then you have this big gap here to fill in this volume. All right. So that's what we're looking at. It did break out of that trend line that you see there, that purple line. And I'm just going to get rid of the volume. We don't need to look at that any longer. But this was that big trend line that all year we could not break. In January, we finally broke out of it. And then what happens with a good trend line? It always comes back to retest that trend line and then bounced again. And now the SPY is sitting over all of those major important indicators. The 200 moving average, the 50 moving average, the 20 EMA is starting to curl back up. You can see here the 20 EMA, higher highs, higher lows, higher highs, higher lows. Will we see a higher high? All right. This is just a trend of the market right now. And right now it does look very bullish. The volume on those big green days has been really good. The selling on the bad days hasn't been as, great. The volume hasn't really been that bad. So I do think, judging by the charts, just looking at the charts, trying to take bias out of it, they might try to get that market up higher and then drop the hammer. All right. That's what I'm thinking is possible. And with earnings season coming up, this could be that time. All right. So as we go into, Q2 with April, May, and June, we're either going to be trading in a range or we see that big pullback, or we don't see a big pullback until later in the year. That's where I'm at right now. But as far as trading this type of market, you just have to look at the charts. Try to go in every day without a bias. I know that's very difficult to do. All right. I had a very difficult March because I kind of got fooled here with February. I thought we were going to break down. Even though I called 380 would have been a nice pullback area, and that's where we got. But it was only there for one trading session before it ripped back up. So the market right now is bullish. Market structure is bullish. Try not to fight that. Try not to fight that at the moment. And the RSI still has a little more room to run on the SPY than the Qs. So if anything was going to outperform, I would say the SPY would probably do a better job. And where is that area? Well, right up here, up to 420. So that should be, if it could get through this area here, which was volume here, which was resistance here, then maybe we do break, or at least try to break this high back in January or the beginning of February before the market started to pull back. So that's SPY. Dow Jones, I mean, honestly, I don't really care about this one. The chart just looks like an absolute mess to me. I mean, it just looks like a mess. So I don't really have any predictions as far as the Dow goes. It's like I said, everything has seen a nice, push back up, and it did close over the 50 moving average. But then you have this sort of trend line. I mean, you can call it. It's definitely a trend line that we've seen resistance at. And then you have kind of this support that broke down, was resistance. So you do have some overhead issues here on the Dow, if anybody trades that. Looking at the IWM, I think this one has an opportunity to really rally. This one got really hurt due to those regional banks, all those small caps. But you can see this was a nice area here of support at 170. You can see it broke down one day, opened up lower, and immediately regained that area. That's a very bullish sign. And it's been continuing to go. Has some important indicators to go. But so far, I think that this will recoup a lot of this loss there. So that's the markets. Want to take a look at the VIX. So the VIX, I have an alert set for this. For the year, right, for 2023, we've seen every time that the VIX comes down and shows a lack of fear, this is where it's been a good time to take profit because the market has gone down. Okay. So when this goes up, that means that there's fear in the market, there's panic selling, and the market goes down. So when we come back down to this level, I'm very curious to possibly short the market. All right. That's just the game plan all year. So that's just what I'm going on. All right. So that would be a very calm market, and maybe some traders get off sides. They get too bullish, and that's when we see a pullback. Now, I'm just looking for pullbacks in this market right now. I'm not looking for market crashes or anything like that, but I am looking for some pullbacks, especially on the Qs. And that's something that in our Discord, and I'll leave that link down below as well if you're interested in joining our trading community. In Discord, last week, I put up there AMD. I saw a head and shoulders developing on this one, and it was more on the 180 day. You can see here the head, you have the shoulder, and then we saw a nice drop here, but it's still holding that right shoulder. It's still holding the right shoulder, but the trade is still to the downside, especially if the Qs come on down. We had a very nice call on Netflix. Netflix was bouncing. I'm just going to take these off. Netflix has been bouncing along this trend line. If we look at this on the daily chart, this is something that we called out where I could see a move back up to retest those highs for the year. All right, so that moved a lot since our last weekly watch list video. That's been a very good trade. All right, and NVIDIA was another one that we were looking at to go short. I did go short. I did get a good trade here, but then since has broken out. You can see by this candle right here. So you have this, and let's just look at this on the 180 day. It's a little cleaner. You had this setup, right? And it kept bouncing, but it was making lower highs. So this was the spot where we said, let's get short NVIDIA. And it did. It gave us a nice move. We took some profit, but look at this rebound. And then that breakout. That's just very strong. All right. So instead of this breakdown, it was more of a nice bull flag, right? That's a bull flag. And that's what it ended up being. So that's going to be it for me. If you have any questions, leave them down below in the comment section. I answer every single comment. Thanks for watching the video. Take care, guys.